Hello everyone and welcome to a new ATFX report. My name is Gonzalo Canete and I'm here one more time in this occasion to give you the last comments and the last updates on one of the most impressive rallies we have seen in the last few years, which is gold. Gold breaking up new top records every single week. Now we're going to analyze why it's happening and also pros and cons in this direction. Reasons why I believe a correction in gold could be extremely dangerous. Comments from Deutsche Bank in relation with this rally, and pros and cons, and also the context, the whole context of the situation. And of course, by the end, we're going to give you a chart review, technical analysis review to give you what we believe is the main reference in terms of price and movements. So we analyze projections and proportions of that movement. Now, before we start, remember, as usual, click on the subscription button, click on the bell to receive notification anytime we update new market news. And also, if by the end of this video you really enjoy and you find this useful, give me a thumb up and leave your comments on the bottom of the video. Gold's unprecedented rally, narrative versus reality. This is the title I decided for this presentation because I want to, well, the main narrative, the main topic is the central banks are just buying and holding, accumulating gold reserves, getting rid of the dollar. The world is changing. BRICS nations are actually trying to follow a process of de-dollarization and getting rid of those dollars in the trade relations. This is a narrative. Now I want to go to the facts. 4 factors. First of all, geopolitical hedging. We have seen uncertainty in many different angles. From a perspective of geopolitical view, we got the Middle East war, the Ukrainian war, and in this point, well, geopolitical hedging, central banks diversifying away from dollar denominated reserves following Russian sanctions precedent. The sanctions against 300,000 millions of national assets from Russia in deposit, particularly in Euroclear in Brussels, is one of the main reasons why I believe central banks have been pointing in this direction. Chinese investors, Middle East investors also probably are seeing in these actions against Russia that they could be the next ones in the list in the future for political reasons. So that's one of the main factors, geopolitical hedging. Sovereign debt fears. We have seen also the bonds, the yield of the bonds from France, from UK, even from United States rising, which is giving us a kind of signal of risk on the main, the biggest economy's debt, and therefore is another factor to invest in gold instead of the usual risk-free bonds, which is the US bond, which is also the yield in UK bonds, France bonds, even German bonds. All of them seems to be overheated, and therefore central banks probably are bidding on gold instead of fixed income on classic free risk bond. Currency debasement. What we can see here is also that the currencies are getting weaker, and the expectation is like investors rotating from sovereign debt into hard assets because they believe even the currency is getting weaker. You are not investing in US treasury bonds because you can see the dollar is getting weaker for the last 2-3 months. And also you are not investing in the rest of the assets because you are looking for something safe and stable. That's why the narrative is saying that gold is one of the more attractive assets lately because it's out of this hedging risk, right? And trade tensions, of course, the trade war between the United States and China, the 2 biggest economies in the world, are fighting in a kind of trade war and battle that it could determine if we either go to a new deal, new agreement that boosts the market, or to a new global recession. So that's the 4 factors of risk that probably are feeding the appetite for gold. Last news, the ones I include in our daily report: 500 tariffs called by United States on China, even inviting Europe to follow them and to apply same sanctions to China. 500% of tariffs could be applied to China if they persist buying oil and energy to Russia, and of course they will, because they have done historical new agreements and deals with Russia in terms of energy and gas. G7 reportedly joins red earth response against China. Also G7, United States is inviting the G7, which therefore it means Europe plus also Japan, for example, to join them and to apply this kind of trade sanctions against China. Deutsche Bank was noticed like the last rally, it took 29 days so far, 31 by now, 31 days, on rally on gold, and by average the last 3 years the rallies on gold took like 19 days, and therefore they believe, based on the last 3 years, we are now in a discount time to face a correction. It's a few factors in pro and few factors against that movement. They also notice here's a where the narrative gets split. On the left side we can see here 3 points mention why they believe the gold could suffer a correction, mainly because we tend to believe that gold is a safe haven, but we also have two different periods of the history when gold was losing value against the rest of the assets, and also the current period, which is extended over the average of the last 3 years, the moment. On the right hand you can see the comments done by the CEO of Tether, Paolo Andrino, who say Bitcoin and gold will outstand any other currency, and we can see the performance of Bitcoin so far this year, 22.79%, and also the gold 52.91% against the dollar, who is dropping almost 9% so far this year. That's the point. Now, from a chart perspective, you can see an extremely dilated movement, bullish movement, which is super vertical, and therefore is inviting us to believe that a correction gonna be also really sharp. This is the movement. We can see also the projection for $4,800 per ounce. We just passed by $4,200. We passed the 50% range of the previous movement, and this is the projection we got in some terms, which is $4,300, most likely the next target of the price. Above those levels, we can also face $4,455 per ounce, or even $4,500 per ounce. Any correction we got right now below those levels, $4,000 is a good support, $4,150 is a good support, and below the next levels, obviously the strong biggest support is in the area of $3,800, $850 per ounce. Levels are clear, but remember, this is the picture. If I should choose one chart, I will just choose this one. Keep that in mind. Super vertical bullish movement also brings very sharp corrections on the price. So be aware of this situation, and I won't see gold right now as an attractive market to jump in, because it's just a show. We just basically showing an amazing show, but we need to be aware of that the correction will come at some point, and it's probably too late to jump in. Okay, that's all. I hope you enjoy our report, and remember, did you like it, give me the thumb up, leave your comments on the bottom of the video, and I see you in the next report. Bye bye.